to start, and so I'm going to kick it off. Thanks everybody for attending Chart Summit Day 2. I am Greg Schnell. I work with StockCharts.com, one of the largest technical websites on the internet, and thought I would share today some ranking strategies for working with technical analysis on the internet. So today we'll kick it off with some ideas around what ranking means and how to use it. And we think we've got a pretty simple system for you to follow, and we'd like to help you through that. So I'm a chartered market technician through the MTA, and I live in Canada, but I do a lot of technical analysis across North America, both on the US side and the Canadian side. I'm on the Canadian Board of Directors for the Society of Technical Analysts, and I've been writing for Stock Charts for 5 years. And joined as a full-time analyst in 2013. So I do a lot of the training for Stock Charts, and Arthur Hill, who's going to join us later on today, has written most of the chart school articles on Stock Charts. So I'm sure for people who have visited the site, they'll have come across either Arthur's work or my work in there. So again, this
Greg,
just
not to cut you off, but can you hear me okay?
I can hear you now.
Oh, okay,
Yeah.
beautiful. I was having some technical difficulties, but welcome, Greg. Thank you, everybody, for coming. I'll let you go do your thing, but I just want to let you guys know real quick, now that I have some audio, I saw Greg give this presentation. How long ago was that? 3, 4 months ago, Greg?
It was in September.
In September. Time flies, right? So one of the reasons I wanted Greg to come in was to really show off, not only he's going to get into it in a minute, but my main focus is, from a buy side's perspective, you want to see, the institutional managers, they want to see momentum and they want to see relative strength, right, Greg? And I think you do a great job of presenting that and kind of filtering through what some of the things that they're looking for. So I just want to make it clear, I have no affiliation with StockCharts.com. Other than the fact that I've been a user and a customer for over a decade and still am. But other than that, I have no affiliation with Stock Charts, so I just wanted Greg to come in here and show you guys this cool tool. I personally love it. So sorry to interrupt, Greg. You do your thing, buddy.
No sweat. Let's rock on. Okay. So with performance ranking, some people don't know what that means. I'm going to make it very, very simple. I'm going to give you one number to kind of work with, and you'll have a better feel for it at the end of the presentation in under 30 minutes here. So performance ranking for your portfolio. When we talk about ranking, one of the things that comes across is we have all of these technical indicators, but we don't have a simple common method of ranking stocks against each other. And so what a lot of people end up doing is they go on the web and they make up all these spreadsheets and they pull down data and they run these macros and they crank stuff. And companies like Investors Business Daily, they have an RS line that continues higher, but the number stays the same. So it'll say 83, and it'll say 83 for months and months and months, but the line goes up. And so I don't understand how that works, and it's a black box system. In this particular case, we're going to show you something that is readily available. You can figure out how it's calculated. We'll show you all of the calculations. So fundamental investors use ranking, and it's price earnings rankings, book value versus price, cumulative average growth rate, earnings, GAAP, non-GAAP, whatever, all of those things. And then you've got your sales ratios, and for companies that don't have any earnings, there's all kinds of stuff. So one of the things that we need is a simple method of ranking the strongest stocks on the stock market. So we want to look for strong relative strength and pattern breakouts. We want to keep our stop either tighter if markets are really iffy, or if there's huge momentum, you want to give them a little bit of room to work. And so I try to stay in until my stop is hit. Recently in December, I had some stop outs. You just get back in on stuff that's working. But I need easy, simple methods to stay on top of it. I don't have a spreadsheet that I calculate every week. So here's relative strength. And what you've got is, historically, you'll take a stock's price and you'll compare it to the S&P. So in example I've got here, it's electronic arts. And with that, what happens is if electronic arts goes up 1% and the S&P 500 goes up 0.5%, electronic arts outperformed the S&P 500 on that day. And that works really well, but the problem is it's quite simplistic. We're using one simple thing to compare. And we don't have a really strong vertical scale, and I'll explain that on the next slide. And then the results really rely on user interpretation. So, how do you use that data to actually find out, just because it's outperforming the S&P 500, that doesn't tell you how it's doing relative to a lot of the stocks in the market. So here's electronic arts up here, and I've got a relative strength line using the colon symbol. And what you see is the scale reads 0.036. Well, Google is at $800 a share, so the scale reads 0.36. And what you end up is having this problem with the S&P being one fixed number and every other stock in the market having a different price. The relative strength scale doesn't work to compare each other. And you can see electronic arts in the bottom here. Price is around $80, and I picked Google at 800. It's obviously different, but the point is, when you use this charting method, you need some way of ranking it. So what we like to do at Stock Charts is we have several technical indicators, in this case 6, that we put together, and then we compare how those add up, and then we rank them against each other. And so it creates an understandable, consistent vertical scale. This is an example found in sports. You'll find it in every newspaper about a sports league. And what they do is they rank the team with the most points at the top and the least points at the bottom. And in the stock market, because we don't really have a start of the season and end of the season and playoffs, we need some sort of method like that. And even in this particular case, this is straight off ESPN's website, but they had ranked the top ones in green, the average in white, and the poor ones in red. And we'll get back to Leicester City in a little bit, but it's really important that this scale exists because, when the Blackhawks play Phoenix in a couple of days here, who are you going to pick? And the reason you'll decide that is probably based before that. I don't know. I just had an audio kick in there, so we'll just see if everything's going right, but I think it is. Okay, so
everybody able to hear okay? Some people's audio is not working, but I think we should be good to go. Yeah, okay. We're good. Go ahead.
Okay, thanks. So I'm going to introduce the concept of the SCTR. So this is the Stock Charts Technical Ranking, and I abbreviated it to Scooters just to make the point real quick. But we're going to get a number from 0 to 100 that represents the stock's strength relative to the other stocks in the same universe. Available in almost every part of the website at Stock Charts. It's in the full quote panel, Sharp Charts indicator. It's in a lot of our tables, makes up a dominant part of our homepage. So there's some real power in this tool, and it's probably 1% of what the website can do, but I think you'll find it's a huge benefit for all investors. So what is an SCTR? To my knowledge, it's the only plottable indicator that compares against numerous other stocks at the same time to give you a meaningful strength ranking that has historical value. Normally you get some sort of relative strength scale like the one I showed you, and you can't really use it for history. But how does it work? It's really like a percentage ranking in school. The strongest ones get 95%, the average is 50%, and we fail half the stocks every day. This creates a valuable scale for stocks competing against each other to decide whose price is moving up faster. So these are some of the benefits I've found to using the tool, but it updates in real time throughout the day. So even if you were a day trader, this will help point you to some of the strongest stocks moving the quickest. It creates an end of day value that is permanently stored, and when we link these historical points together, we get a line graph of how the stock performed compared to its peers over time. That's a really important distinction. Being able to see this history helps you see when there's a rotation starting to move into defensive stocks and out of growth stocks, or vice versa, and right now the market's fully on growth mode. So the scooter points that data out for you. This helps you see a stock gaining or losing power. And when a stock falls out of favor, you probably, especially after it's been in favor for a long time, you probably want to avoid it. So this is what I mean when we talk about a plottable indicator. Here's the scooter line. And this is Apple going back to 2011. And what you see on the chart here is it had periods where it was in what I call the top quartile, above 75. So it was performing better than 75% of the stocks in the market. And it spent almost 5 quarters up here. And then it fell out of bed for almost a year. Had a period where it was kind of middling to average. Everything was kind of going up in early 2013. But Apple actually went on a run where it stayed up here for almost 5 quarters and gave you a huge bullish push, and then it fell back here. And most people, you know, whatever, does no big deal, we've seen this before, but what the scooter was telling you was that things were really changing. And so the stock spent a whole year under its 40-week moving average, and now is just trying to get back into the growth mode. So I'm not going to spend a lot of time to calculate it because I usually take about an hour to an hour and a half to give this presentation, and JC and I have about 30 minutes. So this is all written out in Chart School on the Stock Charts website. Arthur Hill, who presented at noon today, wrote up a lot of Chart School for stock charts. He's a fabulous technician, but everything about how we calculate it is there. The points I want to make in general are that 60% of the weighting on this indicator is long-term, 30% is medium term, like 50 and 20 day, and short-term indicators are 3-day and 14-day periods. Using this tool, you would think it's a very slow reaction. It's crazy good. So don't let the calculation scare you away. There's really strong data here. So how do we calculate it if you just plot these different indicators? So 2 rate of change indicators, the emerging markets in this particular case. And this graph it's not the data on this graph I want to show, it's the actual, just how it's calculated. So we use these 6 tools to create a number for each individual ticker symbol. And then from that ticker symbol, we rank how each of these performed on those 6 tools and come up with a number. So we rank every one, and that's how we end up generating the data. So it is a little bit hard to reproduce just because you need to work with all of the stocks in the stock market to generate it and set it all up. So if you were to invest in the Premiership and try to figure out which team was going to win, the problem you would have is if you knew at the beginning of the year that Leicester City was in the Premiership, you would have given them 5,000 odds, like terrible. And they ended up winning the Premiership. And the thing is, if you would have used the ranking system, you would have made money, but if you didn't use the ranking system, you could have never believed Leicester City would go on to win it. And so the point is, this can help bring things that you don't even know about to your portfolio that'll really help you make some money. So I like to use the scooter or the SCTR to help me select my stocks. And what you find is the bottom 25% trend down, the middle chop around the average, and the top 25 trends up. And I'll be able to show you some charts at the end of the presentation that bring that to full light for you so you can see the difference in performance. So here's Apple again, that same chart I showed before. But what you see on this chart is you have this period of huge outperformance, and look at the run that Apple makes. And then you have this huge period of underperformance. And then you have this huge period of outperformance. And one of the things you'll notice is a lot of the times there's a kickstart to this outperformance, and Skyworks might be one that just kicked out. CSX was another one that just kicked this week. Looking at those sorts of kickers, they end up being pretty meaningful, but it doesn't have to start that way. A lot of times it'll migrate up, and I'll show you some interesting data about financials here in a little bit. So when you see these big periods of outperformance, this is where you can really, really make huge gains in the market. And so the purpose of helping you with using an indicator like this is to keep bringing your attention to what is working now. So we have 4 different universes: the large cap, mid cap, small cap, and then we have typical ETFs. And this is a really nice important bucket, because if you're aware of which ETFs are strong, it can help you make sure that you're investments are in strong ones. And when a stock falls out of favor, it'll fall out for a long period of time, and it's important to not try and hold it because it has been working. When these scooters start to tell you that it's weakening, it's a good time to make sure you're looking for something else to own. Every stock is only in one universe, or sorry, all of the stocks we have that are in scooter universes are only in one. You can't be in multiple ones. But not all stocks have a scooter, and the reason is if they're under $1, that kind of thing, they just move so quickly every day that the ranking system doesn't work when they could have a 50% move by going from 2 cents to 3 cents or something. And scooters from different universes shouldn't be directly compared because the large caps are going to behave different than the small caps. And so you need to, one of the strengths of the scooter system is because we don't have group sizes so large, like everything in one basket, they actually move fast enough that for swing traders or technical investors, we actually get a big signal that helps us stay in the stock for a long period of time. And then it also, it's not the best exit signal, but I don't have time to get into all the exit signals today. But the one thing I do want to talk about is it's a great entry system to help stay on top of what's working. And this is the scooter ranking from early in 2016, and it's not always this clear where it's just precious metals littering the page, and if you don't own those, you're not on top of the market. The scooter ranking helps bring to light what is working, and recently we saw materials work, and we saw oil work for a period of time last year. We saw financials work late in the year. We saw some of the semiconductor stocks work. So this helps bring to light what is working and keep you on top of that. So how to learn about the scooter, I'm going to show you on the actual website now. I'm going to jump over there in just a second. But the stock charts homepage literally shows you all of the stuff working well all the time. It's literally a money printing machine. I would strongly recommend it's a strong part of your day. Look at the ETF rankings. These ETFs always have their own basket of scooters, so you can see what's working, and it'll also help you realize when to invest in foreign markets, when not to invest in foreign markets, when to move into precious metals, when to move into banking stocks as an example. So it's pretty helpful. My personal method is that I like to look at what's in the top 25% and I rank them by scooter, industry group, and sector, and then I just sitting there scrolling through them and take a look. JC said it best, looking at one stock doesn't tell you the big picture. It's when you look at a group of stocks. And so I like to look at the top 25% and not only see what's right at the top, but I want to see what's entering that group, and that really helps me. And just keep track of how the really big names are working, the ones that are always covered on the media, understand where they're at. So in summary, these ranking systems can help tell you what's working in real time right now, all the time. I strongly recommend avoiding the group in the middle between 25 and 75. For the purpose of this discussion, just stay with the top 25%. We'll get into other ideas later on, but use the history on the SCTR and understand how a stock behaves during bull markets and bear markets, like when does Walmart outperform, when does Procter & Gamble outperform, when does Caterpillar outperform, that type of thing. And if you're watching TV and somebody tells you about a great stock that you should be in, just go look at the SCTR and it'll help give you a clue if it's already leading, if it isn't leading yet, and if you've got some time to invest in it. So if you like this whole idea about scooters, we have Stock Charts has a membership as low as $15 a month. We have 12 different writers for Stock Charts. So there's a whole bunch of stuff. We have one of the largest technical analysis teams on the web, and all that's included in your monthly membership. And if you like anything you've heard today about scooters or about education towards some of the technical strength of stocks, you could just follow my blogs or any of the blogs on Stock Charts by clicking on the notify button under each one. So I do a webinar every Thursday at 5 p.m. So you're more than welcome to dial in and follow that. And my Twitter handle is Schnell Investor, and you could email me direct at greg@stockcharts. And now what I'm going to do is I'm just going to head over to the internet and and show you directly on the website how to use these tools. We've got about 10 minutes to go here, so let me just run through and share some of that with you. So this is our Stock Charts website.
You've got plenty of time. You got plenty of time, Greg. Take your time.
Okay, good. So this is our Stock Charts website, and the one thing that I want to point out specifically is, there's so many different ways to analyze the market: point and figure performance charts, candle glance group, sharp charts. All of these are sitting here and they're available for you to try. Julius de Kempenar's relative rotation graphs. This is one of the few places they're available on the web. So there's lots of tools here. So again, I'm touching like 1% of the website in terms of helping you analyze the stock market. But we're going to use things like the scooter rankings, and we're actually going to go to a different part of the website on homepage here. So I was on the free charts tab, but here is the homepage, and on the homepage, this is such a big part of stock charts that we actually have put a whole section right on the homepage to help you understand the market. And when you look at large cap stocks, these are the top ones right now. And you're able to just quickly candle glance at any of these. But before we get into using these, I want to show you how the different groups look, just to help you in general with why it's so important to be in the strong stocks. So one example is NVIDIA. And nobody really looks at a stock chart like this, but what I want to show you is, the scooter for the last 5 years was really underperforming and you weren't getting any real action here. And then briefly it had periods of outperformance and then underperformance, and you weren't making a whole bunch of money, but it was still working. And then all of a sudden it really starts to outperform. And in this period of outperformance, it's gone on almost 6 quarters now. And so, by itself this looks very good, and it is very good, but the thing is that the scooter would help kick you into the stock and make you aware that it's continuing to perform week after week. Looking at that same tool, we have a full quote box at the top, and we tell you which group it's in. So in this case, it's large cap group. Its scooter ranking is 99.7. Obviously, it's been doing very well. And in about, since the scooter last went across 75, it went from $24 to $120 in a year. And so this strong sort of movement, it's easy in hindsight to pick them, but the big point I'd like to make is when a whole group starts to move above 75, it's an important place to step on the chart. And so here you have NVIDIA running up, and now the volume, even last week was a 5-day week, and the previous week was a 4-day week. And what we have is lower volume and well below average. So NVIDIA is starting to get to the point. I haven't found many charts just historically that have run more than 5 or 6 quarters. So I think NVIDIA is getting late in the run, and it might just need time to breathe. Maybe it only pulls back to the 50 and just hangs out there for a while and then gets another set of jets behind it. But these long-running stocks, again, just there's not many of them that run that far, so be careful. So what I'd like to point out on the scooter rankings is just how the charts look. So in this particular case, I've taken just scooters greater than 75, and when we look at these charts, I just pull them up, and here's an example of the Fidelity financials, and they started to go above in mid-October. So while everything else was making lower lows in November, this was actually starting to perk up already, and it was actually making higher highs coming out of there. And this scooter has kicked up and really given you a huge run. Now this is an ETF, and lots of the actual individual stocks went on way bigger runs than that. But even if you used XLF or any of the other ones, they were all starting to point you in that direction long before the big part of the move started. And so the strength of this can really be shown, I think, this is the ETF scooters, and the strength of it is that it helps you understand, and just looking across all of these, most of them are financials, so they help tell you that that's the sector to be in. Now, if we go to the large caps, this particular group I have here is the large caps greater than 75, and we're looking at the top of the list here. So here's Vale out of Brazil, absolutely soaring. This is up, one of the things that that few people understand is the stock chart expands to fit the range that the price is moving. So in this particular case, this stock is up over 100% in 4 months. NVIDIA is up from 60 to 120 in 3 or 4 months. When we get to the weak stocks, the scale is moving by $4. And it's that kind of rate of change that you don't understand because the chart always fills from bottom to top. So it will change the scale on the right-hand side. And so when something looks like it's going up, it's really nice. They're all going up. They're all in the top right-hand corner. The difference is one is up 2, 3, 4%, and the other one's up, 100%. So in this example here, we can see Western Digital, Micron, NVIDIA. Here's semiconductor stocks that are soaring. Now, these are the ones that are at the top of the list. Here's Bank of America. This thing kicked up in early October, so not in November, in early October, and went on a huge run of about 50% in that period of time. Southern Copper, it's been running for a couple of months now. So I hope you're getting the idea. Look at how all of these charts are up and to the right. They're really nice to own, and they're a lot more fun to own. Looking closer to the bottom of the list, what happens is a lot of these are just in the 75%, just coming into the group. And so I've just literally scrolled to the bottom of the list. But what you see on a lot of these is they have moved up, or this scale it's moved up about 10 or 15%, not the 50 or 100% that we've seen on some fast ones. Now, this is a particular example of one I would like because it has come up, tested the scooter range, pulled back, and then resumed its run. This is a nice trait that you'll see commonly in a strong stock. And when it starts to make that run up, they can help you get positioned. But just by being aware of where the strong ones are, it can really help show you which ways to go. And now here's Citigroup that was well over 90 and it's down to 75. And you're starting to see this breakdown. It just tells you that you really need to be cautious. Here's Principal Financial, and it's starting to fall out. So as these financials are falling out, there's a clue here that the strength they had might be abating. And maybe you want to start looking. So we saw CSX absolutely soar the other day, and here's some of the other railroads chugging along pretty good. And it's those tools just helping you stay aware of what is working in the market that I think is most helpful. Okay, so when you run your scans, and in this particular case, this is just around 50, and what you see is that these stocks, while they look like they're going up, here's the scale. This thing has moved almost a whopping 10% in the same time those other ones have flown. And the stock is just kind of treading water sideways, but you're stuck in it, and there's no real money to be made here. Here's Campbell's Soup, and oh wow, it's made a big move of about 10% or 15%. So it looks like just a fabulous chart, but the problem is the move really hasn't been that significant. Boston Scientific up 10% or something. So that gives you an idea. Now, if we look at the ones that are really weak, these charts are, they have downsloping 200-day moving averages. They're just chopping around. There's no real money to be made here. And here's Starbucks up in this top corner. And what you see on Starbucks is, the moving average was flat. The 200-day, the 50 had started to turn up, but Starbucks had moved from 54 to 59, so about 10%. And, there's no real reason to own it here because it's just an average stock at this point in time. Now, if you click on the chart, you can bring this up, and in purple is my relative strength. I'll just separate that for you. But what you see on the chart, this is looking at 18 months of data. Do you really want to own Starbucks through all of this and look at the scooter just kind of drifting lower and saying it's an average stock? Now, Starbucks may go on another run again, but its scooter will light up and it will move back up into the top of the range, and that will really help you time your investments into those types of things. So I think the scooter's big strength is just keeping you in what's working. And again, if you want to short sell or whatever, then maybe you want to focus on the ones at the bottom. Lots of people like to try and buy them when they're breaking out of these bases, and I'm spending a lot of work trying to develop a system around that. But for the most part, strong stocks moving higher, that's what institutions are buying and stepping on the gas pedal for. And it helps you a lot more if you're in those strong stocks. And I can tell you, you're very happy to update your profit and loss statements when you're using strong stocks compared to when you're using weak stocks. So it's one of those tools to sit there and help you. With with stock charts, again, our basic membership is like $15 a month. Even if you just wanted the technical analysis component of 12 authors, that's a pretty low-cost membership. But there's lots of tools here for members, and our job as commentators is all about trying to help you use those tools. And it's John Murphy and Martin Pring and Arthur Hill and Carl Swenlin and Julius de Kempenaar. There's just so many of them. So in each individual blog, we all have our blog pages in here, and we try to write about different things. In this case, I've used Pring's Dow diffusion indicator this week, and farther down on the blog, I'll write a quick educational segment, and it'll talk about how to use different tools on the site. And so on these, I'll show you a big arrow. Here's how to use the sector summary and scroll through. So we try to educate you on all of these different technical tools. The big thing that you'll find when you use the Stock Charts website is that a lot of the technicians will try and help you use the site to make money and try to teach you how to fish, as opposed to having you rely on us to show you where the best stocks are. So those are kind of the key components of the scooter ranking. There's one more thing I just want to share on the home page, and if we've got enough time for that, I'll cover that off, and then JC, if you had questions, that would be great.
Go for it, guys.
Okay, so over here on the commentary part of the page, these are all of the different commentators that we have, and so some of them, John Murphy with his market message, Martin Pring with his market roundup, Arthur Hill, Carl Swenlin. These are all of the ones. If you like Wyckoff charting, Bruce Fraser from Golden Gate University publishes here. Trading Places, Tom Bowley. For the RRG charts, the relative rotation graph, all of these things are sitting here, and they're all tools that you can use on the website. So I just hope to help make you aware of all of those things. Now, in finishing up again on the Stock Charts homepage, what you've got is these large cap scooter rankings, and you can literally just see which ones are the top moving today, and then you can go candle glance, and it will bring up these. Now, again, I'm in the ETF, so it brings them all up, but here's palladium, and a lot of people have been talking about its big moves recently. So it's hard when they're all moving a lot, and that's a common thing in the market. But what you find is the top ups start to make you aware of stuff that's starting to work. And then you can just look, here's your top 10. And then once you kind of zoom in on things you want, you can actually click in on these large cap tables, mid cap, small cap, whatever, or you could go specifically into a biotech group and look through the biotechs. If you know nothing about biotechs, this would help you find what's working. And so here's an example just of ETFs that are working really well right now. Members see the whole list. Visitors to the site see a shorter list. But the idea behind looking at what is working is just making sure you're in the strongest stuff, because that's what institutions use. It's hard to be a great technician using average stocks. You make a lot more money in the stuff that's trending strongly one way or the other. And the scooter ranking can really help you do that. So again, just a brief introduction to it. For more information, our chart school article is here, and you would just type in SCTR and learn all about it there. It's a huge component of the stock charts tools, and Arthur Hill has written all about this. There's many great technicians you're going to listen to this afternoon, and thank you for the opportunity to speak. And with that, I'll turn it over to JC for questions.
Thank you, Greg. I really do appreciate that. And I just want to reiterate that, the entire idea behind the Chart Summit is to really provide kind of, educational value, educational tools, current market commentary. I think this is great. I have no affiliation with stock charts whatsoever, other than the fact that it's just a tool that I like to use. So I want to reiterate a couple of points that Greg made. This is a tool that we can use as technicians as a supplement to price, right? And correct me if I'm wrong, Greg, but when it comes to entry points and exit points, we're going to listen to a lot of technicians that, are going to talk about that sort of thing. I know I'm going to talk about it myself. This is a supplement to price. This is kind of like a starting point, like, hey, wow, let's look at who's leading the scooters. Oh, wow, look at the top of the scooter list. There's 20 gold miners on there. Maybe I should look at the gold miners, right? So it's kind of like to help point you in the right direction and just, again, reiterate that this is a supplement to price action itself when it comes to entries and exit. Would you agree with all that, Greg?
Absolutely. One of the big components in the market is just understanding where to go. And even if you just take the main sectors and rank them, sorry, I have an airplane taking off right outside my window. The scooter rankings here set it up. Now you can see that consumer staples, utilities, and healthcare, the three most defensive industry groups, have the worst scooter rankings. Like, they're in terrible shape. And so the best three are financials, materials, and industrials, and technology, 85 and higher. These are absolutely rocking. And so it really helps you understand the breadth of the move and where you want to start with. And just, clicking through on whatever, let's pick the materials just because those have started to work. You can either just, now that you know that those groups are pretty strong, then this helps you drill down to see the next level. Steel is actually one of the worst performers lately, and it had been so strong for a long period of time. Because you can't buy these groups, they don't have a scooter ranking, but then you can go on to the scooters, to the actual individual companies, and start to look at these. And what you see is all of these different companies have scooter rankings, and I see that Alcoa, since it's changed, hasn't got its scooter ranking replaced yet, so I'll go back and get that fixed. But looking at these companies and just seeing their stock charts, we've just done 3 clicks, and all of a sudden we're into strong scooter rankings, and it's helping us show that. So I agree, it's a high-level tool, and for for a lot of the technical methods that we'll learn about today, the scooter is like an entry filter to get you working on strong stocks, and that's how you can really make some money. Yeah.
Love it. I think this is great. And just so a few people asking Greg, because you went over a lot of stuff, if this is going to be recorded, and yes, it is going to be recorded, and everybody who registered will receive an email this week with links to this recording as well as everybody else's. So no problem on that at all. Something else I want to reiterate, Greg, you bring up such a great point that buy-side fund managers, right, they're looking for 2 things. They're looking for momentum and they're looking for relative strength, right? And that combination of the two, I think you nailed it when you said, it's much more fun being a technician when you're buying stocks with high scooters, but it's fun. It's much more fun updating your P&Ls. Is that what you said?
Yeah, I mean, I don't know about you, but when I use lousy stocks, I really hate updating my P&L.
Yeah.
And so it's always fun when it's like, oh, plus 5% this week. Yeah, I like that. So
I love it. And another factor, that I hope you can touch on quickly, before we hand it over to Jeff Hirsch. A lot of these tools are free, Greg, right?
The Stock Charts website is littered with a lot of free tools. Like, everything that you see here is all on the free part of the site. And so if it's point and figure you want to learn about the chart school, if you're ever interested in any sort of indicator, technical indicator. If you've never heard of the mass indicator or whatever, you just go in here and type it in and hit search, and it'll pull up all of these different tools that we have. And so um, it, I strongly encourage you to hunt across this site. If you're a beginning technician, this is a place to go. If you're an experienced technician, this is a place to go just to get some stuff. There's loads of stuff on the free side of the site, absolutely tons of it. And I think the single biggest thing is that, there's a lot of commentary that's free. There's a lot more commentary that's like $15 a month. I don't know that it can get any cheaper. But just for the commentary model alone on 12 different technicians working with you to help look at the market, I think there's a lot of great ideas there. And there's lots of great technicians coming up all day today. The one thing that helps the most is making sure you're in strong stocks, and fundamental investing doesn't tell you what a strong stock looks like. A lot of times it's value investing or that type of thing. We're looking at the price action by investors, and that's what makes a stock move. And when the stock moves, we want to be aware of it, and we want to be able to move with it. And things like the scooter or point and figure breakouts. I mean, we have a whole page just set up as predefined scans. And, new 52-week highs, you can click on this and it shows you all of the stocks that are starting to break out. There's so many tools, and then you can click on the scooter ranking and, bring them up in the order. So there's hundreds of items on the website that I'd love to tell you about. But the idea of using strong stocks to make money is a really good one.
I want to reiterate that point. I think that as a supplement to price action, right? This is I'm not into filters at all. I am the biggest. I'll raise my hand. I am the biggest hater of filters you'll ever meet, because I think that they're the most valuable thing that you can do is actually go through the process of looking through all of those charts, right? And I'll when I present later this afternoon, I'll talk about that as to how many charts I'm ripping through and going through the work. So I am very anti-filter, and I'm here telling you how great this filter is. Not just because it's a shortcut to give you the strong stocks, but it's bigger than that. It's pointing you in the right direction of the strongest stocks. And Greg, I'm glad that you brought up the sectors, right? 10 sectors. The lowest scooter rankings are staples, utilities, healthcare. I mean, these are garbage sectors. And just by looking through all of the charts within those sectors, I could have told you the scooters are terrible. And, on the flip side of that, industrials look good. Financials look good, right? What about technology? The scooter ranking's got to be pretty up there too, right?
Yeah, it was 85%. I mean, okay, so the top four are stunning. And, here's Netflix. The scooter breaks out on 75, and again, on this big gap it took up. Now, this is hard here where it comes down below your entry point. But, this is telling you it's pretty strong, so it goes up, comes back down, and takes off again. This is on a nice uptrend. And, you're working with this. It's gone from 120 to 140 in a couple of months. You can get by making a living on that kind of thing. And so, again, like JC said, I think one of the easiest things to do is to just put together a list of charts and start working with strong ones and just scroll through and see what you like. And when you look at these in a table mode, so just in a summary mode, the one thing I like to look at is, just have a quick glance at the page, materials, industrials, technology, and just get a feel for what's going on. Here's 10 financials in a row kind of thing. So what do you want to do? And being aware of all of those financials, are you in the strongest ones? We already saw Citigroup was breaking below 75. Well, Bank of America is still at 98.7. That's two different banks that are going on, and you want to make sure you're in the strong ones. So the scooter, even though you went into financials, the scooter can help make sure you're in the strongest ones.
I love it, Greg. You really are the man. You presented it so lovely. I really do appreciate you coming in and kind of sharing this. I think this is a fabulous tool. So we have tens of thousands of people all over the world listening in, and I think this is a great tool to kind of point us as technicians in the right direction of the strongest stocks. I love it. And I still keep cracking up. It's so much more fun updating your P&L when you're buying strong stocks. I couldn't have said it better myself, Greg. You're the man.
It's very good. Hey, JC, I look forward to seeing you in New York in April. We'll have a lot of fun there again, I'm sure. For everybody else, if you have any questions, feel free to hit me on my email here, gregs@stockcharts.com. Anything that I could help you with, I'd be happy to. And I'm at Schnell Investor on Twitter, so jump on there. And again, enjoy the afternoon and the whole day of presentations. One thing about technical analysis is there's so many different methods, so many great guys that do it. And again, Jeffrey Hirsch next goes on and on and on. What a great list you've assembled here, JC.
Thank you, and thank you for being a part of it, Greg, for sure. And for all of you guys who are asking about the agenda, if you go to www.chartsummit.com, you can see the entire agenda for the day there. So feel free to jump on there in case you're wondering what's coming on next. So thanks, Greg. I really do appreciate it, and beers on me in New York in a couple months.
Okay, sounds good. Talk to you soon, Chief.
Bye-bye.
And everybody enjoy your day. Thanks.